The secret to building £1 million portfolio, starting with nothing. Welcome, my name is Daniel Wood and I'm one of the founders of Momentum Property Education, and I'm super excited to invite you into this video. Because in this video, I'm going to show you how you can build a massive portfolio with very little or nothing starting out. Excited? Sound too good to be true? Well, stick with me and I'll share with you exactly how we do this. This is something we teach all of our property students: how to get into the market, how to start investing, and then how to grow a massive portfolio. So we're going to split this into two parts, because one part is about how do you acquire your first property, and then the second is how you use that property to leverage and build a massive portfolio from there. So actually, I'm going to start at the end, and we're going to start with how do you take your first property and build a massive property portfolio from that, and then we're going to circle back and look at how do you get that first deal. Sound good? All right, exciting. So once you've bought a property, once you own a property, what happens then? What does that mean to you? Well, if you bought it to hold, it's one thing if you flipped and you're building a capital strategy. I'm going to think in a hold strategy now. So if you buy a property and you're holding this property for long-term growth and cash flow, that's the benefit you're getting, right? Every month you should be getting rents and you'll get cash flow. If you put that money away in an account, what starts to happen? Well, that starts to accumulate, right? Now, if you also have debt on the property, so if you've used a mortgage, say you bought, I'm going to do some numbers here. So we're going to bring up some numbers here next to me so this gets really easy and clear. So say you bought a property for £100,000. Now, so you have a 75% mortgage on that property, all right? So how much deposit did you put in yourself? Well, $25,000 from you and $75,000 from the bank, right? Now, usually you'll have other fees, right? You'll have your stamp duty, you'll have your surveyor, you might have a sourcing agent, you'll have your legals, you might do a refurb. There's a lot of different parts, but I'm just gonna use really round numbers here just to illustrate a point. I hope that's okay. If you wanna go through the details, we have lots of videos here on our channel that go through the details. So make sure you subscribe to the Momentum Property Education YouTube channel so you get all these videos that come out every week with different information, all right? But I'm gonna use some round numbers to illustrate this point. Now, so if that's what's happening, say for example then, if you spend £25,000, say you're getting a cash flow of about 10% of that. 10% of 25,000 would be 2,500 per year, all right? So to break it down again, you bought a property for 100,000, you spent 25,000 of your own money, 75,000 of the bank's money, and your net profit every year is 2,500. Now, after 4 years, how much cash flow have you made at that point? Now now we're disregarding the fact that probably you're going to have some rental increases during this period. We're just going to pretend it's flat for this period, all right? So after 4 years of 2,500 a year, how much do you now have in your account? 10,000, right? 2,500 times 4 is 10,000. Great. Is that enough to buy a new property? No. We just said with this property we're looking at, you need 25,000. So 10,000 is not enough. But is that your only income from a property? No. You also have the capital appreciation, right? The property will go up in value. Now, average properties, if you buy in a good area, now this varies greatly. Great areas, you might have a 10% per annum growth, while other areas might even have flat or negative. Right? So I'm going to use kind of an average area. That means you're buying in a larger city, but not in the center, but still not out, not out in the countryside. You're still buying in a larger city in a good, decent area, right? So it's not crime filled. It's just a decent, your average area. You should be looking at about 5% value increase per year. Does that make sense? All right. So if we had our property, year one cost £100,000. Year two, if it's gone up by 5% in value, how much is it now worth? Well, if it's increased by 5%, 5% of 100 is 5,000, so that would mean it's now worth 105,000. So I'm going to fast forward this a couple steps. So we go year two, year three, year four, year five. In year five, it's now gone up in value. Now, you got the number right here in front of you. I do not, because this is something my amazing video editor has done. So he's been able to do the numbers. Now, I'm gonna just say, in 5 years, say it's worth about 127,000, right? So you've had 5,000 per year, but also some compounding, so about 127. Now, your mortgage is still £75,000. Does that mean you used to have 25,000 of equity? Does that mean you have more equity now? Yes, it does, right? Because that 25 or 27,000 has been added up too. So your equity is now about 50,000. What would happen if you take a 75% mortgage on this new valuation? What would that give you? Well, you'd probably get around 15,000 pounds out. I'm going to let our editor bring up the exact number for you here. But in 5 years of 2,500 pounds per month of cash flow, that's 12,500, plus about 15,000 in a cash out, what does that give you? Well, over 27,000 pounds. That means you could go out and buy a property that costs as much as this property did originally, right? So it might be a little further out than the one you bought first, but you put in a deposit. What has now happened? You got 2 properties. Did you put in any more of your own money? No, you didn't. All you did was you bought a property and you waited for 5 years, and what happened? Your portfolio doubled. All right, let that sink in for a moment. You bought one property, 5 years later, it's doubled. Not doubled in value, doubled in size, doubled in number of units. Essentially, your property has divided itself and become 2. What does that do for your cash flow? Well, obviously that goes up. What will this now do to your capital appreciation? Well, if you now have a portfolio of one property worth 127 and one worth 100, that means your total portfolio is worth 227. 5% of that means your capital increase is rising quicker as well. So what can you now do? Well, say you wait another 3 years. You should now be able to buy deal number 3. Now you got 3 properties, maybe 2 years later you buy deal number 4. And then maybe from there you buy a deal every year. Now this is with average growth, that everything would be simple. You know, markets go up and down, up and down, up and down, which means some years this will go even better, while other years it will be slower. But on average, this is how you can grow a portfolio. We call this principle momentum investing. Momentum investing means that you use that first property to acquire a second, to acquire a third, to acquire a fourth, without having to put in more money. On average, again, average market periods, you would be able to use one property, and over a 20-year period, that one property would actually become 20 properties, which is incredible. Now I know, we don't want to be waiting 20 years, but just think of it for a moment. You buy one property one time, 20 years later, you have a 20 property portfolio. That's an incredible growth. Again, I know markets go up and down, and crashes might happen and will guaranteed happen. But if you do this smart, if you think things through, you can get this split and growth equivalence, which will allow you to build a huge portfolio. And now think about it. What if you just didn't buy one property, you bought 2? What would that do to your future? Or buy 3? Well, how would that affect it? And your portfolio would grow faster. Right? So that's what's really, really exciting. When you use the momentum investing method, you can acquire properties rapidly. You can grow a huge portfolio with very little effort. Now the question is, and let's go back to what I talked about at the beginning of the video, the question is, how do you buy deal number 1? That's the challenge, right? How do I get that first property? Well, there are actually 25 different sources of capital. One thing you can do, there are basically 6 ways to acquire a property. You buy it cash, you buy it with a mortgage, you get it through a lease option, you use seller financing, or you can rent to rent. So there are different ways of doing this. I'm gonna focus now on the purchasing, right? Because that's what we want. So if you buy something cash, that means you have to put up all the money. If you buy something with a mortgage, you only need to put that 25-30% deposit down. That allows you to acquire a 100,000 pound property for maybe 30 to 35,000 pounds of your own money, adding in the fees and maybe a lower loan to value on the mortgage. Just say 30, 35. Now, if you're gonna put in 35,000 pounds into a property, how do you find 35,000 pounds? Well, like I mentioned, there are 25 sources of capital that you can use. These 25 sources, one of them is your own money. So if you have 35,000, well, there you go. Buy a property, get it rented out, and then you let the momentum investing method do its thing. Now, if you don't have that, there are 24 other sources of capital that you can lean on and use. And this is where property investing gets really, really exciting. And that's why I want to invite you into our YouTube channel. I don't have time to go through all the 25 sources here with you now. So I'm going to invite you into our channel because there are videos here that teach you the 25 sources of capital, that teach you the principles of how to raise finance, and that shows you how the financial system works. You'll see videos from the Momentum Investing podcast where we interview experts that show you how this works. We've interviewed people from Kim Kiyosaki, Chris Nagel, Jordan Harbinger, Chris Cooper, Shimon Rudis, Simon Zucci, amazing people that can show you how you can do and raise finance to do your first deal. You'll also see me be interviewed on the Real Estate Marathon podcast. That's under our playlist called Interviews. There you can see how, when I walk through each one of these 25 sources, so you can learn how. So make sure you subscribe to the channel because there's a lot of great content. And now, if you are excited to get started, if you're excited to buy your first property and use the momentum investing method to grow on and build a massive portfolio, I want to give you a gift. If you're just starting out on your property journey, you want to start building a huge portfolio, we've created a free course, completely free, no strings attached, you're fine. 3 simple steps to property investing and the 3 most common mistakes new investors make and how you can avoid them. This course is 2 hours. It goes through everything you need to know in order to become a successful property investor. If you go to Momentum Gift, the link is down below in the description of this video, momentumgift.com. You can also see it here in front of us, momentumgift.com. You can sign up for free and we'll show you how you can start building your property portfolio. So I'm excited to follow your journey. I'm excited to see you become financially free, see you use the momentum investing method to reach your goals, live that dream life. Thank you so much for watching, and I'll see you soon.